What is up, everybody? Welcome back to another episode of Bitcoin and Markets. And let me unmute Telegram. There you go, Telegram. So happy Friday. We made it another week. Hope you guys had a good week. Price is dipping. We're going to cover the price of Bitcoin, a bunch of different stuff in macro, currencies, gold, what's going on there. Look at the US 10-year, see if it's giving us some hints, oil, all of the things I usually touch on in my big macro roundups. Take a look at ETH and some of the altcoins. They're dipping too. And when Bitcoin dips, altcoins and things dip harder. Then I wanted to talk a little bit about China, their export numbers and their CPI, and tie that back into currencies. So the Japanese yen, the Chinese yuan, and the euro. So it's a big macro smorgasbord here on Friday. So I hope you guys are doing well. Thank you for joining me. Comment down below, like the stream, help me grow the channel. If you're not subscribed, please subscribe. Trying to get up there to monetize the channel. So let's share the screen here. Bitcoinandmarkets.com is my homepage, so check that out. Free weekly newsletter comes out every Monday, and I have some premium content that comes out usually every week. This latest one, gold and yields, tell us everything about the upcoming recession. I have another one that's I'm starting to build the charts for. I've already built a few charts for the premium content. It's going to be on cycle projections or forecasts for what we can learn about previous cycles compared to this cycle. I started going down this line of thought because I was writing for Bitcoin Magazine. This piece, this time is different, unprecedented having forces. And so I wanted to make some of these longer term charts for my own premium members over there on Bitcoin and Markets. And so that's what's coming up next. Actually, let's stay on BM Pro. And I want to go, I hope this is okay with these guys. I mean, I am pretty much their macro writer, but we had this mining industry pre-having dynamics post that came out today. I just got done writing it. And it covers things like this. Okay, so this is part of our spreadsheet that tracks a bunch of things from miners and mining activity and network traffic and all sorts of different metrics. This is all of the public miners. And I'm highlighting here the Cypher and Hut 8 because they are not only having good performance going into the halving when others are falling off dramatically. I mean, some of these numbers, negative numbers, are pretty substantial, but they also have a growing or very large Bitcoin reserve. And I think after the halving, they're going to, the ones that have the largest Bitcoin reserves are going to be shielded from any sort of volatility after the halving. So that would be, of course, Marathon and Riot, but we have to talk about Hut 8 in that conversation. And Cypher is growing rapidly. I think they added 300 or 400 Bitcoins in the last month to their reserve. I think they only sold 8 Bitcoins out of mining. Let's see, they mined 316. So they hodled 308 out of 316 in March. So that is, they're adding a lot. Plus they are very, they're having the best performance out of all the public miners. So I'm highlighting these two miners to be watching for the next little while. Go through that. Mining activity. The big investor insights that I had were the period immediately following the halving will be critical for observing how the adjustments in the mining difficulty and miner behavior impact the broader market. Stay tuned for Bitcoin Magazine Pro for this analysis. All right. Fee revenue and market dynamics. We should expect fees to increase with uncertainty. And that's what happened this morning. I was talking to Telegram a little bit this morning about there was this real big spike in fees. You can see in this table here, $21 when I pulled the data this morning. That was a huge spike. And when I went to look at the mempool had spiked. We'll take a look at that here in a second. So that is I was sharing the wrong tab, wasn't I? Oh my gosh, guys. Noob mistake. So let me go back here to, was I sharing the wrong tab? Man, I can't tell. Now I'm all backed up back and forth here. I think my tabs are messed up. But anyway, real quick recap. I was talking about this chart. I think that was right. I think you guys saw that fine. And then these investor insights, we were talking about this, and I don't know why this opens up a whole new tab. That was the problem. $21 was when I pulled it this morning. Mempool went up, and as we're approaching the halving, the uncertainty is going to build and build. And so we should expect some fee insensitive transactions to start going. And we should expect an increase in the mempool, increase in fees around this uncertainty. But okay, let me see what else we can talk about here. We did talk about inscriptions. They're going up a little bit. Charts of the day. Here is the mempool chart. You can see it did get into some higher rainbow colors, some darker rainbow colors. That means the fees are going up and up and up. That usually precedes some volatility in the price. Okay, and this heat map I thought was interesting as well. You can see all of the liquidations are stacked above the price. So that means that that's where there's going to be a lot of cascading effects. So as you liquidate the shorts above, they have to buy the Bitcoin, and that's going to shoot the price up, really high. So are we going to see this volatility continue to the downside that we're seeing right now? Most likely not. There's not a lot of liquidations, at least for Bitcoin. There might be for altcoins, which can affect Bitcoin as well. But Bitcoin proper is not seeing a ton of liquidity below us. It's mainly above us right now. So, all right, that was that. I got a little bit too involved with that. Let's go to some macro charts. Here is Bitcoin. And let me, real quick, I'm going to maximize this for Telegram. Okay, so here is Bitcoin. Bouncing here a little bit, got all the way down to 65,000, bouncing back to 67,000. Right around 9 a.m. is when I went on Telegram and pointed this out, that there was some high fees and mempool congestion, which usually precedes a sell-off or volatility, at least volatility. And that's exactly what we got with this big cascade downwards. Let's go around to currencies now. Actually, let's hit gold first. So gold here had this miraculous, let's go to the daily, because this is just a huge run for gold. And what I've been saying for months and months and months, probably years, is that as we move toward a new monetary paradigm, away from credit-based money to commodity money, Bitcoin is going to benefit for sure, because it's the new thing and it's the best fit for some sort of new paradigm. But gold is also going to benefit because it is the most recent commodity-based money, and that's exactly what we've seen here. I still own gold. I never sold the gold from when I was a gold bug back in the day, but I don't actively buy gold anymore. I don't consider myself a gold bug anymore. So anyway, this has been a really good rally, but they got smashed here at the end of the day. 4 consecutive huge red candles smashed down at the end of the week. Interesting. Everyone's trying to figure out what's going on with gold, and I would just tell you, it's pretty easy. It's pretty easy. There's a collateral shortage. There's a dollar shortage, and gold is a safe haven, just like Bitcoin is a safe haven. When you're approaching recession and you're approaching counterparty risk, elevated periods of elevated counterparty risk, you're going to go to assets like gold and Bitcoin that don't have counterparty risk. So this is pretty much, this rally is expected. It's not the case that we have central banks are noticeably turning to gold. Not quite yet. I mean, they might. They might be slightly diversifying a little bit, but in a dollar shortage, they don't benefit from de-dollarization. They do not benefit from de-dollarization. Look at their currencies. Their currencies are more crap than the dollar. Let's just take a look at some of these. The euro today. Let's go to the daily. Last 3 days, big dip all the way down to 106 from, 4 days ago, it was up at 108. Now it's down to 106 and it's falling. I mean, it has a long way to go still. Let's zoom out here a little bit. Um, so it's still up here. It's got some support under it, but bad week for the euro. These currencies are worse than the dollar. There's no reason to de-dollarize. Interestingly, low happened here end of Q3, and then that was in 2022 and 2023. End of Q3 as well was the low for the euro. I mean, we're a long way to the end of Q3, but I could see it going like this, all the way down to parity or something before the end of Q3. Okay, so that is that. Let's go to the yen. And we talked about this earlier this week, I believe. Maybe it was last week. But it has broken this 152 up to 153, just looking very, very weak here on the daily. It looked like it might recover a little bit, but it is going higher. And, this is very bad for the carry trade. It's very bad for uh, the global financial system because everything is interconnected. And if you have one major currency like the Japanese yen starting to fall apart or the euro starting to fall apart, the chain reaction in the global financial system, in the global banking system, which is the financial, the banks are the system. And this can cause major problems. One thing that I was talking about for a long time was worried about the end of Q1 banking crisis like we had at the end of Q1 in 2022. 2023 might see a banking crisis as well. We didn't see that yet. We're still kind of within this 2-week window on either side of the end of the quarter, but we are seeing signs now of some stress that's going on in the banking system. Okay, let's go to the Chinese yuan. And it has a similar weakening here, going higher on these. The yen and the yuan is weakening. They're trying to hold this peg. They're trying to hold this floor right here, but they're probably going to be unsuccessful. I could see Friday opening, way up here. Or sorry, Monday opening way up here, and following the yen, this would be weaker for the Chinese yuan. All right, so that is the currencies. What else do I have on my list here? Let's go to US 10-year. Big dip on the day here. As we go into recession, this is not a recessionary chart. I mean, not a recessionary chart at all. We should expect in a recession for prices, yields to come down, and they will come down naturally. The Fed does not have to cut rates. That's what a lot of people get mixed up, is they're so worried about what the Fed is going to do. When is the Fed going to cut rates? When blah, 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 blah. They would do a much better job forecasting if they just disregarded what the Fed was doing and looked at what the markets were telling us. So right now, this is this is not looking very, going up this way. It's not looking very recessionary. However, if we zoom out and we look at this in a little bit different context here. So from a little bit bigger picture, this high, we're still significantly off the highs of last October. Right now, still right at 10% off the highs. This would have to extend this rally a long way to get into, where we're not going to have recession. To what's the term I'm looking for? To negate the coming recession, this would have to continue to go higher. If this turns over and starts going down, with the yen collapsing and the yuan collapsing and all of these other things going on around the world in the global banking system, the global financial system, if this turns around and goes lower, that's going to be a sign that we are going into recession. But that will be the final straw. When this turns around, we can say we are definitely nearing recession. Okay, last one up. Let's check out oil. Lots of lines here on this chart. But let's zoom out a little bit. And I talk about this quite a bit, but it's good to get an update here. So this top formed back pre-Russia invasion of Ukraine, was right around 95, was support here in April. support here a little bit in July, but then it broke through. Then it was resistance several times. Then we found this other support from, back here, but it got support. Don't forget the people that were calling for $200, $300 a barrel oil over here when it was 100. They have been dead wrong. And I just saw a headline on Zero Hedge where people are, what was the term they used in the headline? Like $100 a barrel oil frenzy. People are just frantic to call $100 a barrel oil. It's not going to get there, guys. Trust me that. All right, this 95 was resistance here again, and that is even with a war in the Middle East and the build up to the war right now with stuff going on with Iran and Israel. So we've seen a big rally here, but we are still far below this 95 resistance, and it would have to take a lot. I mean, a full-scale war in the Middle East, shutting down Hormuz. They already shut down the Red Sea, right? If they can shut down Hormuz, then that could make oil go a lot higher. But right now, short of that, there's not going to be major highs put in for oil. This is most likely turning around now. Let's see this day. Yep, this was an ugly candle, going to close red. So that is not good for that. Okay, let's go to ETH, and let me bring up a tweet here first. This is a tweet from Carpe Noctem. Follow him on Twitter if you don't. He also has a YouTube channel. So he's a good technical analyst, and he's been writing in the Bitcoin space for a long time. He's a little bit of a shitcoiner, but nobody's perfect. But yeah, lots of red out there, lots of bloodbath going on in the Bitcoin space. ETH down 6%, Solana down 8%. Don't talk a lot about altcoins because they are just scams trying to take your Bitcoin, but thought I would show that. Now let's go to the ETH chart. Where am I looking? And it's broken down back below 0.05. Could not hold at new lows. So it hit new lows here for Ethereum. And I'm expecting it to go lower, guys. I don't think that altcoins have a role in this coming bull market. What has a role in this coming bull market are the equity altcoins or equity alts that I've talked about. And let me pull those up. I think I have it open here somewhere. Okay, so this is just a back end of my website, and I snapped this before going live. You see today we have Bitcoin up top here, and then can I zoom in a little bit more? If it's going to remain clear, I don't know. But okay, so we have, oh, come on. Bitcoin up top. Then we have all of these Bitcoin related equities, including miners, Block. Let's see, who else is in here? TSMC, Coinbase, MicroStrategy. We have a couple ETFs like this 2x ETF strategy. There's a few more that I should add in here. If I could, I don't think my program, because I'm just using the Excel, built-in Excel stock thing. I don't think I can pull the Meta Planet stock performance, but that would be another good one. The new Japanese stock that's following in MicroStrategy's footsteps. But anyway, you can see most of these are down relative to Bitcoin on the day. And I should have put that same formatting on these 30-day, really bad. Really bad. All of these are negative except for these two. What would that be? Coinbase and TSMC, which is just barely, it's connected to Bitcoin through chip manufacturing and stuff like that. It is part of the Bitcoin miner ETF as well. But Bitcoin and the related stuff for TSMC is probably 1 to 5% of their business. It's nothing really to count. But yeah, there you go. That is the new altcoin list. We don't need to worry about Ethereum. It's going to keep dropping. We don't need to worry about Solana. It's going to keep dropping. We need to worry about these type of equities as well as inscriptions. And I know a lot of people aren't big on inscriptions. I'm not big on inscriptions either, but we need to, I think we can learn a lot from that. So one thing that I've been looking at inscriptions for is as speculative interest in Bitcoin. And let me just pull that up and see if I can get the right tab here. Okay, share this tab. So this is what's going on currently with inscriptions. You can see some of these going back here, January. Let's see, when was this? Beginning of February is when we had these big spikes in numbers of inscriptions up to 400,000. Then we had this kind of dull period where they're averaging about like 30,000 to 80,000 inscriptions a day, give or take. And the mempool was clearing, fees were really low. But then just recently it started ticking back up. And why do I look at this as speculative interest in Bitcoin? Because altcoins are dying. I mean, they're not dying. They're not going to go away completely, but they're going away as like legitimate things. And so where does that speculative retail YOLO FOMO go to? It goes to inscriptions, most likely. I think most 99.99% of them are scams, and I would recommend not getting involved with them. But this is a way to measure speculative interest, just like we would with altcoins. So when you have an altcoin season, now you're going to have like an inscription season. That is going to bleed over into fees and other things. So just be cognizant of that and aware of that. Okay. So where was I? I was on the equity alts. Do I have anything else to say about this? I can't think of anything else. I think that's it for this topic. Let's go on to the next thing. And that is going to be, actually, before I do that, let me check the comments, see who's here. Dex Invictus with us. Bought Z dip. Sergio bought Z dip. Congratulations. Yes, that is probably the biggest dip. Let's go to the live chart here real quick. If I'm missing it. Am I missing the bounce? I don't think so, but in the grand scheme of things, this looks like nothing. And I do still expect this to go sideways. Ever since March 4th, this has been going sideways, just weaving in and out of this important level that we set back here on March 4th. What's good about this is that if we would have had a pre-halving pump, so a lot of people were talking about this breakout right here. Let me zoom in a little bit. Oh, come on, man. Stop it. Okay. Because a lot of people were drawing this, including myself, right? This type of consolidation. And this looked like a breakout. And people were looking at pre-halving pump. Okay, so pre-halving pump goes up like this. Well, if we went up like that through the halving, most likely we would have a post-halving dump. And I didn't want to see that. In the grand scheme of things, it doesn't really matter. But, I think it's better to have consistent, reliable 1% a day. 1% gains a day. We don't need to see these big rocket ships followed by big dips. But anyway, so since we went sideways now to the halving, I think we can see a post-halving pump go through the halving and a post-halving pump, because this halving is a highly uncertain time. And we were talking about that for the miners, the way the miners are performing, and miners performing well before the halving, and that they have large Bitcoin reserves, probably a good sign for performance after the halving. But overall, I don't know how to tie that back in with the price. But here we just have, if there was momentum going higher and then sell the news event and going lower, Now we have the opportunity to actually have a buy the news event with the Bitcoin halving. So that's that. Sergio, I'm going to go check out Telegram, see if there's any comments in here. Working while listening. What's up, Green? Let's see who we all have in here. Quite a few people in here on Telegram today. Hope you guys are having a good day. Let's go now to our final kind of topic. And that is going to be China. China. What's Trump say? China. So this is Jeff Schneider. I owe him a lot in my understanding of the monetary system, but we do differ in some important ways. He is all about the Eurodollar system, and I get the impression that he thinks the Eurodollar system can be fixed and work. Okay. And that we need to spend our time really understanding the ins and outs of the Eurodollar system in order to diagnose the problem to fix it. Where I differ from that is no, it is fatally flawed. The credit-based system is going away. It's over indebted. It's 50 years old. It's over indebted. It's done its duty. And now we're going into a period of deglobalization, depopulation through demographic decline, and deflation. And what's the, at the end of that is not a fixing of the system. The end of that is a complete paradigm shift towards Bitcoin. And Jeff does not see Bitcoin as a viable option. He actually consults for blockchain stuff or stable coins or things of that nature. So we differ a lot in those respects. Anyway, this was an interesting chart that he put out showing China's CPI. And you can see the Spring Festival, it always pops. That, and of course, as CPI is going up, that means there's credit being expanded, right? If you view money as credit, which you should in today's system, then as CPI is going up, and credit should be being expanded. All right. It's not always that way. Of course, prices can go up for many reasons. But if you're if you're hoping to grow your economy, you should expect CPI to rise. And that's what happens at the Spring Festival. You get this boost of economic activity around that time, and they see consumer prices rising. But now they are going back to post-COVID lows. I mean, can you believe it? These consumer prices are falling as fast as they did at the beginning of COVID, when there's people falling over on the streets and it was locked down. Everyone was locked into their apartment blocks and stuff, welded in. And now we're having consumer prices that low or falling that much. That's crazy. That means there's some major problems going on over there in the Chinese economy. Okay, let's go to the next one. This one I thought was also interesting. So globally synchronized consumer prices, you can see China in red, they have come down. They're leading. They led on the way up. They're leading on the way down. Japan took a long time to turn, and now they're starting to come down as well. Didn't get nearly as high, but everybody's coming down. Globally synchronized consumer prices. Now, if individual central banks mattered what they did, okay, why would these be so synchronized? Look at Japan's monetary policy throughout this whole period. And they're the lowest inflation. And they're the most accommodative by a long shot. And they have the lowest consumer price inflation. China really didn't do much. They've been slowly cutting rates. And we had this big spike and now crash in their CPI. They didn't do much. This doesn't match their monetary policy either. Everybody here is synchronized pretty much. But their central banks are all doing things differently. Their fiscal spending is all different. How can this be possible if everybody's doing things differently, yet they're globally synchronized? Because It is a global financial system. It's an intricate web of banks and repo and derivatives and rehypothecation. Everything's connected. That's why everything is falling together. If China's doing this, most likely everything else is going to follow. Okay. And as we go into recession, CPI is going to crash too. But that brings me to something I didn't plan on talking about, but I'm going to talk about it real quick. And this is in regards to Robert Murphy from Mises. I know him from the Mises Institute. He's an economist that I've been reading for decades. And let me just find that so I don't have to talk through this. Sorry, 1 second, guys. There's me. Okay. There we go. So I responded to this tweet the other day from Bob Murphy. And he's responding to MMT Stephanie Kelton. And he's talking about the Fed began raising rates, the red line, and year over year consumer inflation, the blue line, started falling. Okay, so let me make this bigger. So red line is Fed policy. Blue line is year over year. That's important. Year over year inflation started falling. Okay, now since this has been flat, the Fed policy, CPI has also been relatively flat. And that's what he's saying. He's saying that these things are connected. All right. So now let's go back to my chart. Well, first off, let me find my response to him here. So this is the chart I responded to him with. Month over month inflation, though, hit a brick wall in July of 2022. It did not respond to all of this Fed raising. So see, if you look at year over year inflation, you are going to not understand what's going on. You're going to miss things. This right here shows high CPI month over month and then falls to zero, brick wall. And at this time, I was talking about the coming brick wall. I thought it would fall faster. I thought we would have some negatives in here. If you go back and listen to my content, I was talking about multiple negative months of CPI, and we never got those, but that would have made the CPI fall even faster. But it didn't fall further. Like, this is the lowest reading, July of 2022. I believe it was negative. Yeah, it was very slightly negative. See the 0.006. There's not another reading that low. So if all of these raises of Fed policy causes the CPI to fall, why would July 2022 be the lowest? And we never really have gotten off the floor. It stayed low. So anyway, that's what I was pushing back on Bob Murphy about. And why did I start talking about that? Oh, CPI. Yeah, so interesting conversation there on Twitter. All right, I'm going to check the comments again here, guys. It's Friday, so if there are no comments, I'll cut out here. Let's check Telegram. And lastly, I'm going to check Twitter. Hold on a second. I'm going to go here for a placeholder while I check Twitter. I don't know where the comments would be here. All right, let's see. No, not seeing any comments. So, all right, guys, happy Friday. Hope you guys have a great weekend. Get outside, spend time with friends and family. You know, the things that are really important in life. And I'll see you guys on the next one. Bye.